Hey everybody, we're just loading up here. Please allow a couple minutes. Alrighty, good morning everybody. Just a quick update. So we're rolling the white paper out on Friday on the new front end website. It's going to be a pretty basic version of the site at first. We're software developers, we iterate, we use an agile process. So we're also looking for feedback and all that good stuff. But we have a nice phased out um, launch plan. It's all detailed and outlined. And of course, the entire vision is outlined as well. Seems like the bit rate is a little weird on X. I apologize for that. I'm gonna have to reach out to support there and see what's going on because YouTube seems to be good, but we really want to make sure we push everything on X. So um, it's important for us. Let's see here. I'm just gonna hand over the microphone to SPDas. I woke up about an hour ago and have been having coffee and looking at charts, coding, like dealing with all this stuff. But I just want to make it clear that we're pretty excited about this project, and I think there's some disconnect for some people because it's kind of odd to see that there's people in some of the chats and stuff like that that are you know just eyeing price alone and stuff like that on certain charts. And I understand from a trading perspective and all that stuff, like you're gonna do that, but there's more to investing and trading than um, especially with like larger projects and things like that. Uh, you know, one of the one of the adages from like patience. Uh, I'm not even gonna get into it. I'm just what I got a little bit triggered, and I'm just kind of like rolling on this. Um, kind of rant right now that doesn't really apply. So I'm gonna pass over the mic to SPDas. Why don't we just get started and we'll pick it up on Friday for the white paper. That's what it's all about. It's about you folks. It's not about. my feelings and stuff like that. So I'm just gonna stop that. Here we go.
Forex Lens gives you the edge. Forex Lens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. Forex Lens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with Forex Lens. Check out our performance at ForexLens.com. Get the edge on trades. Your eye into the markets. ForexLens.com.
Mr. SPDas, you are ready to rock and roll anytime.
Okay, thank you, Igor, and welcome back, everyone. As we move into the second session for the day, London, not exactly the London Open, but just about a few hours after that. All right, we've got some trades set up. Interesting. I think I'll pick up pound first because we discussed it a couple of days back, and it has carved a new low, and but the setup is still very much in line with what we had discussed. So let's quickly. Okay, what I'm going to do is go straight to the business where we've got trades that have lined up. All right. What I can see here is uh, five wave. Let me just draw the path quickly. 1, 2, and 3, 4, and 5. That is the path. The third wave was extended. It subdivides into five waves again: 1, 2, 3, 4, and 5. Wave 4, right across the previous wave for a one lesser degree, and neat little five waves here as well: 1, 2, 3, 4, and 5. Okay. And one more thing which I keep on saying, it's very interesting to watch out though, as the price declines with the new low, the RSI uh, remains higher than the previous low. And that is the bullish divergence I was referring to last time as well. So what we now have in hand, this is an aggressive trade, of course. So if you're a conservative trader, it is better to wait for a break above this resistance, 1.25, 1.2570. So conservative traders, please stay aside. The aggressive traders, if you are still inclined to build a position on a risk basis, because I like to trade this signal or the condition very much personally. Or you can wait for the break about that resistance and then go long, or then go long after a drop. Let me check out on the Fibonacci extension as well, just to confirm that we're good to go. All right, it's the 38.2% touch already, and there is a possible low which is around the 22.14. So I'm going to take 100 points of risk. We'll place a stop loss around 1.2150. All right. Pound is a nasty instrument though to deal with, but it's that also gives a great trading opportunity. So we would like to position ourselves here around 1.2280. Maybe you can take a partial long here, remaining around 1.2220, correct? Stop suggested is around 1 point, let's say 2140. We stay away from the noise and target is open. Target open. I like this is a risk trade again, uh, but the bearish divergence scenario is playing out nicely. Worth taking a call. That's why I wanted to bring up pound chart first. Not because we just stopped out, so keep away and stay out. That's a way to deal as well, but I prefer to take it head on when there is a diverging scenario and you see that diverging scenario right across the 4 hour time frame. I'm trying to show divergence across multiple time frames. This will give you a lot of confidence to deal with the situation. There you go. All three charts are showing bullish divergences, all right? So long on the euro, on pound again around 22.80 now with a stop around 21.40. And we'll take it from there in the next session. We'll follow it up again. All right, let's come back to the Euro USD hourly chart setup. We've already discussed the larger degree time frames. Now, this is where the business is lying. I'm still not surprised or still not be surprised if the same happens as we just saw in pound. All right, in the New York live, we will come to know what the situation is like because if euro is dropping towards 2200, just in case if it's wanting to make one more below that, completing 5 days right there. It's okay. It's only going to give us yet another opportunity, even after we are getting stuck down about 150 points or so. But at this point in time, nothing like that has happened. We would like to remain on the long side from around the 1.03 handles. I think we've been maintaining long positions around the 350s and also just around the 300s, 1.0300 zone. That remains intact. Stop loss goes right around 1.0200. That's the stop. And the Fibonacci extensions, Fibonacci targets. To be around 1.06 and 1.07 respectively. Very well. And in terms of the lower degree, because we are not doing the larger degree counts, let's at least complete the lower degree counts here. I need to change the degree though. Just give me a moment quickly. I was just doing a chart setup for a friend for pound dollar on a daily basis. So I just change the degree here. Let me I think it's my new day. Yeah. So we are looking for wave 3 rally, and that should be passing on the way through 1.06, and then a corrective decline wave 4. Wave 4 will take some time. We will get two opportunities. One, if we are correctly done, the first opportunity is right now to go long. We exit at wave 3 and then enter at wave 4, termination again, and exit at wave 5. Now, these are the short-term trading strategies. All right, so long euro, again, we have a dollar index where we are short, but as discussed in the euros and pounds earlier, won't be surprised if there is, this could be a sideways wave 4 digging around, and there might be a spike in the session, which I would be looking for, and if required, I may broadcast a bit early requesting Ego to broadcast it early when the price action is just right. All right, so stay in touch and watch out for the next broadcast. which we will be doing in a few hours around the New York Open, just after the New York Open at 9:30 Eastern. But as of now, it's short around 109.20, the stop loss around 109.80, and the target would be around 106 and 105. Once again, the degrees are minute. I'm still skeptical about wave forward here. For example, let's say, let me try and draw the worst come scenario. Worst come scenario is that price is pushed through the 1110 handle. All right. And that is where we will be watching, because I'm pretty much sure with that spike on hand, we are going to see we already have a bearish divergence on hand right now. Let's say if it goes up to 1110, a worst come scenario, we are still going to be seeing a bearish divergence here on the other side, and that would be giving us another aggressive opportunity to go short again. Of course, for conservative traders, it would not be the correct place to go short, but aggressive traders, be prepared for that handle as well. All right. That's the beauty of analysis. You've got to be prepared both sides. It keeps your mind very busy. Okay. And also not boring actually. When the price action is on fire, your mind is also on fire. So again, we've got some time to draw down the wave counts for gold. If correctly done, we are going to see a wave 3 lower, followed by 4 and 5 going forward. All right, this is one scenario where the stop loss is going to be around the 2730 zone. Touch base of the 61.8% is the minute indicative wave 2 potential. And we now need to see a break below. Let me draw a channel here. Ideally, we now would like to see a break below that support. We need to see that break below that support. Confirm that we are heading south. All right. And the other scenario for gold, let's take out the worst comes output as well. Let's say the primary wave 4, which we have been discussing in gold, which could drop towards 2500, is just completing right now. Okay. In that sense, we would begin to see the fifth wave rally, wave 1, wave 2, third wave extension, maybe fourth wave triangle. If it's wanting to dig as a triangle, even though if it's wanting to do a triangle, it's going to drop one more time. Remember, triangle has got 5 waves. Each wave subdivides into 3 waves. And then the thrust wave. Remember the case that we are discussing in the Ripple since last 2, 3 trading sessions. That could be the worst come scenario. But at least we should see one more drop to to terminate the wave E, and then finally the thrust wave 5 higher. Okay, time for the coins now. You see that Bitcoin acting on the other side of what we have been discussing, correct? So nothing surprises me. Even if it were to test 91, it's okay. A larger degree corrective wave still prevails. Watch out for this entire scenario as a correction. That is also possible. That could be a corrective wave, a complex corrective wave A, B, and C, or 535, a zigzag. All right, because you see that five-wave decline here, and then a three-wave rally, and then again a five-wave decline. So, but nothing should be taken for granted in the sense that if you keep your stop loss open, or if you avoid, let me take this Fibonacci ratio out now, it's getting more interesting. Okay, so it's not required anymore, the Fibonacci retracement. We are not working on this current boundary at this point in time. Either we've already retraced, Bitcoin has already retraced and is ready to go up, or it's going to dig lower further towards 91 in any case to complete the larger pattern of a corrective way, a potential zigzag somewhere around 86 or 87, and we'll pick it up from there. Okay, so but that doesn't mean that we move our stop loss completely. Our stop loss has to remain below that 90,000 mark or below that 91,000 mark in any case. Don't take anything for granted, ladies and gentlemen. We are one good factor, one good thing that we are seeing from yesterday is that with the price action dropping lower, the RSI is inching higher. Now, this is again a strong bullish divergence scenario, which again emphasis on lays its emphasis on the long side, at least in a corrective manner. So we should be seeing a push higher from here, uh, if not in the next session, pretty soon enough. And the next target still lies intact towards 110 and 121 or 125. It only remains to be seen when the correction is going to end. At this point in time, it looks like it may retest 90 zone or may push from here itself. Be prepared for either ways. A test of support and then turn around. That's what looks more likely right now. It will be the same case, Ethereum as well. It looks better than the Bitcoin. That could be a lower degree wave one and two in place. But you see, we have been discussing this entire price action as it's going to take some time, and that's what it's doing right now. So if it is a running flat, it's quite possible. That's an impulse again. So if it's a part of a running flat, A, B, and C, it's possible. If it's not a running flat, it's going to be a standard flat. It's going to come lower towards 3,100. Please at least keep your stop loss below that for now. We don't know whether the price is going to go up from here or it's going to test the previous low. Both scenarios remain possible for now, but we are not ruling out a possibility of another high after that event of moving higher from here or testing and then turning higher. We still keep our options open for the 4,300 test according to the daily chart. Here's the daily chart again. Wave 1 around the 2,700 levels till the time that is intact. We are good to go on the north side again. Here's the daily chart. Wave 1, wave 2, wave 3, 4, and the fifth wave is just underway. Okay. no change in Solana again. Keep your stop loss intact around the 175 mark and keep looking for the next upside target towards 250, 280, 300 plus. And quickly, we've got time for Ripple. This this is a classic example of what a triangle looks like and what it could behave like. I mean, that is A, B, C, A, B, C. So that is D, and here now we have E. So if the E is, let me just check out the ratio here. Just give me a moment, please. There is a ratio. Adjacent waves are 61.8%. So if that is E, this is D, and this is C. So it should be 61.8% of the C wave. Let's check. We're going reverse, and you see the 61.8% of C wave being tested right now. So theoretically, wave E, which should be around 61.8% of wave C, is technically complete. And if we have done what we have done is correct, then we've got the lower degree wave 1 and lower degree wave 2 in place as well. So the next immediate move in Ripple should be on the north side, 2.70 as the third wave resumes, and that should be very fast. Remember, it's going to break out of the triangle, which is going to even further the pace. So the target for Ripple, please keep in mind. Oh, that's a distorted view. 3.7. All right. Looks very neat little impulse, and it's a classic book example of a triangle wave 4 and then thrust wave 5. This is what is the fill in the blank. Ripple should fill this blank like that to complete. And one more thing, I mean, the distance traveled for wave 1, we can equate that distance with wave 5 because the third wave is extended. All right, so you can just count here, 0.38 to 0.65. No, but in this case, it's not going to work out. If we add 0.40 here, it's going to be 2.6. Our targets are slightly higher than that. But most cases, at least in the Forex market, it works like wave 1 equates wave 5 when the third wave is extended. Having said that, we would like to bring it a pause here, and we'll be back again in a few hours to touch base in the New York Live. Back to you, Ego, and thank you everyone for your presence.
Thank you, SPDas. Much appreciated.
Yeah, bye-bye.
Take care. So one of the things that is important to discuss that we haven't really gotten into on the sessions just yet into more detail, but it is in terms of understanding risk, understanding capital preservation, diversification, any type of tools and techniques you can use like stop losses, pardon me, stop losses and take profits, hedging, um, back testing, and of course, like one of the most important ones is psychological management. So, especially for the new folks out there new to trading, I mean, if you're not studying how risk and like market risk, liquidity risk, volatility, and even operational risk, right? Whatever platforms you're using, the swap rates, all that, the spreads, you're going to run into a lot of issues and you're going to have a difficult time understanding what we're going through here on the charts, right? So a trader like SPDas and a trader like IT Trader, when they're trading, they're performing this already. They're calculating their position sizing. They're calculating their risk reward ratio, their operational risk, right? These are factors that they're considering. So during this type of analysis, when trades go against you and you only have 1 or 2% of your capital invested in a trade, well, guess what? You're not going to get wiped out, right? This is important. This is like the biggest thing about all this, investing, trading, everything. You have to preserve your capital. You have to understand your own brain, your own psychology, your emotions. You have to be disciplined. And if you're not, you're going to end up being one of those people buys at the top and then is crying because you just leveraged your whole bag, right? It's important, you know. I mean, some of the things to do that help a lot. Personally, I keep a paper journal because I'm a little bit old school, but I literally detail every single trade I ever take, whether it's in crypto, Forex, investments in stocks, tokens, whatever it is. And I write down my rationale. I write it down. I'm like, why am I taking this trade? What is the reason I'm taking this trade? Is it because I saw a live session? Is it because someone on X said that this was cool? Right? Is it because there's a lot of FOMO? Whatever it is. Why? Why are you taking the trade? If you don't know that, why are you taking the trade? What's wrong with you? Right? Write down your entry. Write down your exit. Write down the outcome. What happened? Why did it go against you? Why did it go in your favor? You know, it pisses me off. It pisses me off when I apologize. It pisses me off when people make irrational decisions and then they look at the outside world for the answer of, oh, why did this go wrong? You're wrong, they're wrong, and I have nothing to do with it. You know what? Take some responsibility. Take responsibility. Take this into your hands. It is yours. It is your capital, your life. Take responsibility. Anyways, I love you guys. Stay tuned for 8 a.m. with IT Trader. A whole different perspective. We have lots of confluence points. We have divergences. This is serious business. Your capital is serious. It's your life. Anyways, see you soon.
ForexLens gives you the edge. ForexLens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. ForexLens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple. With ForexLens, check out our performance at ForexLens.com. Get the edge on trades. Your eye into the markets. ForexLens.com.